Yo, what's up, degenerates? It's your boy Hodlnomics, aka Doge GF Sancho, in the house. And today, guys, I'm going to go over the markets at large, the crypto markets at large, the macroeconomic landscape. I'm going to give you guys some numbers and some drivers that you should be looking at that you probably aren't paying attention to yet, give you guys some resources, and also talk about what I think the Federal Reserve is going to be doing and talking about on their meeting that's coming up here on the 26th. So, all this stuff is super duper important to be paying attention to, especially right now. I think the macroeconomic market is something that not many crypto people talk about, but it's one of the most important things. But as always, none of this is financial advice. Do your own research. Make sure that everything that I'm saying here, you go verify it yourself. Don't be listening to any clowns on the internet to make your financial decisions. Be responsible for your own decisions. So remember to like, comment, subscribe if you like this. If you have any questions about what I'm talking about, put it down below, but I would really appreciate that. It does help the channel out quite a bit. So let's just get into this. So this is the Bitcoin chart for the past year. So we had this crazy dump. I want to compare what's going on right now to what happened earlier last year, this year, whatever you want to call it, but back in April. So this dump right here began April 13th, and it lasted through July 19th, July 20th, depending on what chart you're looking at. So that is a 3-month and 5-day correction, 3 month and 6 days, something like that. Right now, this top here was November 8th, and we're still trying to find the bottom. We're still figuring out where that is, but we are 2 months, 9 days in. So we're about a month away from it matching the prior dip. So about a month away from that. Additionally, that was a 54% correction from 63,000 to 29,000. We were at 68,000. We're up down to 42,000. That's a 41% correction. So we still have a little bit ways to go. If it was to match that, if it was to match the last one, we would be going down all the way to 31,000, and it would take about another month before we reach the bottom. So that could be possible. We'll see what's going to happen. However, I think what's going on right now with a lot of this is just the fear, a lot of fear in the market because of what the Federal Reserve has said that they're going to do. Now, they said that they're gonna try to curb inflation, they're gonna raise rates, and we're going to talk about some of this stuff here in a second. But when they do that, essentially when they raise the rates, or when they're saying that they're trying to give the illusion. And this is what I think the Fed is trying to do. They're trying to give the illusion that they don't want inflation. However, I believe that they do want inflation. Now, this is just my opinion here. Take it or leave it. But I believe their goal, right? And if you understand how loans work, right? And we'll kind of talk about this here in a little bit. But the loans, everything funnels back to the Federal Reserve pretty much globally. They start the lending tree, and then it goes down, and banks buy loans and bonds from the Fed. And then people will buy those loans from the banks in the form of mortgages or in cars and certain things. And so essentially the Fed owns all of it essentially until we own it and pay off any debts that we have. It's essentially the Fed's. I believe what the Fed is trying to do, they're trying to inflate, they're trying to decrease everybody's purchasing power, have all sorts of loans default all over the place, and they're just trying to own it all. Now, again, that could be crazy talk. That's, but it's not unrealistic to think like with everything that's going on. And if you're following my channel, you're probably on that same wavelength, but that's my belief. I think that they're not here for us. They're not here for the United States economy or any of that. They are an organization that wants to control everything, have all the power, and they're going to do that by accumulating assets. And so it's really interesting. And so one of the places that and by the way, I've tried to learn a lot from as many people as possible over the past, couple years of me doing this. And by all means, I am not a pro in any sense of the word. However, one guy has been consistently right. And if you follow Matty G really likes this guy too, but it's Gregory Mannarino. You can go follow his page. I'll put a link down below. I really, really like him. His style is way different than anybody else that I've ever heard. He's almost always saying the opposite of what mainstream is, or whatever you're hearing from other people like Robert Kiyosaki and all this stuff. And he's been right every time. Like I always heard to listen to him, and I'd listen, and I either didn't understand, or I was like, okay, no, I just don't believe in what he's saying. But over time, a lot of the people that I've listened to have just been wrong, and he's been right every single time. So I've started listening to him a lot more. I've started to really dive into what he says and learn about the different metrics that he talks about. And he's a macroeconomist. That's what he's really good at. And it all makes sense. It really does all make sense. And so essentially, right, the Fed, you can go check out their meetings here. It's actually really important. All of these dates coming up are going to be really critical dates in the future. So this meeting right here, January 25th through 26th, this is the FOMC meeting. You can check out what that is, but that's the Federal Open Market Committee. It's basically what the Fed, what they do when they announce how they're going to manipulate the economy. And so people are expecting pretty much all across the board for the Fed to raise rates. And they probably will. According to Greg, right, they're probably going to raise rates. It would be shocking if they didn't. They've said they're going to do it several times this year. However, this is already being baked into this price right now. This price is falling in large part because of things that the Fed have said about what they're going to be doing in the future, right? So that's what we're seeing right now. Now, I do think in this meeting, by the way, it's the 26th. So we have right now, this video is coming out on the 17th. We have 9 days, about a week before this meeting comes out. I think we could see some more dip action in between here. Now, if Bitcoin falls below 39K, there's really no resistance. If you look at this chart here, we have this little resistance area right here. It's really, there's not much. That's at 38K. If it falls below 39K, the next resistance level is going to be about that 30 to 33 range, wherever in this little zone right here where we were waffling around on this last dip. So that is very much in the cards, right? So I'm not buying anything right now. I am starting to put cash into where I need it to be, get it on certain DeFi. Now I know what I want to buy. I'm going to buy a lot of Glimmer. I'm going to buy a lot of Casper. I'm going to buy more WAGMI. Those are the things that I'm looking at on my next dip. If I'm missing anything, if there's other things that I should be looking at, let me know. And also some Dumble DAO. Don't forget about Dumble DAO. That one's going to be good too. By the way, I am starting a new token. It's called Dumble DAO. There's going to be a transaction tax that's going to go to the DAO funds. Those DAO funds are going to be purchasing passive generating NFTs for like video games and land. Then we're going to be distributing the passive, rewards and income to holders. So over time, the way that this passive stuff works, I'm an insurance agent that can generate like a lot of money over time. And so really, really excited about that. And that's going to be coming around with this Dumbledore movie that's coming up. So we're going to be launching really, really soon. We're testing some final things on DX Sale. So there's a link down in the Telegram below to hop on that. But we will be having our pre-sale on DX Sale hopefully by the end of the week. I've said that like last week too, so you never know. But anyways, keep moving back over here. So we could see another dip here. I've got my money in for the other dip. However, when the Fed meeting happens, I think that the rate change, and again, this is according to Greg, and he's been right for the past 2 years. He has not been wrong about what the Fed is going to do. And there are people that say it's been even longer than that have been following him. He thinks the rate change, the rate hike is going to be so minuscule that the markets are going to respond favorably. So what we're seeing right now is the price is falling because they are, it's in the expectation about what is going to happen. Once they do the rate hike, it's going to be so small that the markets will respond favorably. Now, will we be going back into a bear market or into a bull market after that? I hope so. We'll see. We may need to wait until, but we'll see. There's actually, if you look, there's about 2 months before the next meeting, so we'll see. I mean, we could experience. I would imagine that the markets will respond favorably for quite a long period of time. Now, the other thing too that Greg talks about is looking at risk in the market and understanding the debt market. The debt market is the bond market. It's very confusing, very abstract to understand. And honestly, one of the things that helped me understand this a lot more was going and learning how Ohm and Olympus DAO worked, because that's essentially the same model but on crypto. Once I saw how they did stuff and how I could purchase some of the bonds directly from them, that help me conceptualize it. So if you're having a hard time with some of this stuff, go dive into Olympus DAO and play with it, or some of the other forks that are like that. There's Time Wonderland, there's Spartacus, there's Hector DAO, there's Euphoria. There's so many of them, but it's interesting, and they essentially do the same model that the Fed does to generate money, right? And so it helped, but but he talks about, and so the debt market, you got to understand the debt market to really have a grasp of the overall landscape of these markets. And he's right. And so that market, it is really in charge of everything. And that's where it all starts, because it's bonds being issued by the government. And what a bond is, right? It's bonds and certain loans and things, but a bond is kind of like a reverse loan. So instead of me getting money now, a large lump sum from the government, it's the other way, and then I pay them interest. So at the end of the day, they have more money. It works in reverse. I'll pay the government a large lump sum now, or any entity, a bank or whoever, will pay them a large lump sum. Then they'll give me payments with interest. So over time, I will have more money than I originally put down. So that's what a bond is. And so there's this whole market, all this crazy stuff going for it. But essentially, the thing that you need to understand with the bond is the market, and the driver that everybody looks at is the 10-year Treasury yield index. And what this is it's the TNX chart. But this is 1.772% is really what that means if you're looking at it on Google. But that is essentially, so this is the yield that I would be getting if I buy a bond from the government. Essentially, if I give them money up front, let's just say it's $1,000, I'm going to get interest back every year of 1.772. Essentially, that's kind of how that works. So if this is high, right, that means, and this is the safest thing to put your money in, essentially. So if this is high, that means that I could invest my money here safely and make return on it. So when this is down, when this is not doing very, very good, people like to put their money in riskier things. So the stock market and crypto. So we're seeing it's on a bit of a rise now, but this also combines with the dollar index. So this is the dollar index here, also on the bit of a rise. Oh, went up where it disappeared. But the dollar index essentially is, right, if the dollar is falling, if the value of the dollar is falling, people don't want to hold that. Doesn't make sense to hold it. So again, they put their money in riskier things. So Greg has this algorithm here that's basically the dollar index times the treasury yield. And so the lower, and you kind of need to look at both of them, because if the treasury yield's high and the dollar index is low, then the debt market is still not super duper risky, or the bond market, the debt market is still could be in a situation where the markets and the crypto and stock markets are going to be bullish. So you got to look at both of them, and this is an indicator that he made that looks at both of them together. So you can see this is moderate. It can go way, way higher, and if you just go look at the 10-year yield chart for like an all-time, you can see we're still relatively low. So even though we've gone up a little bit recently, it's still relatively low, and it could go down here as well. So you've got that. Dollars all over the place if you go look at the dollar as well. But looking at them in tandem is a really, really good way to see where the whales are playing, where they're going to be putting their money, kind of thing. So I look at this all the time, at least 2 or 3 times a day. I'm looking at this. I'm checking this out. If it goes up, I'm looking at the markets. But the way he coaches you is that in this environment, the moderate risk, we just want to be careful. Obviously, there's no magic. There's no. It's not 100%. It's a risk indicator, but this is moderate risk, and this is the low side of the moderate risk. So he thinks it's going to go up over time, but right now he's like, yeah, no, this is nowhere near high risk to where people are just going to be yanking their money out of the markets. People, and he's like, the whales, the people who understand this stuff, understand that the money to be made right now is in the markets. So that's where he's at. That's where I'm going to be staying at. However, I am hedging with gold and silver. I am taking profits out. Like I just took some profits out on Proppy earlier. A lot of that's going to be going into gold and silver. So no matter what happens. And he does say that when this spikes here, when this spikes and this goes crazy, the markets are going to go down. So the MMRI goes up, the markets go down, and he's like, when it happens, it's going to happen pretty quickly. And so after this goes up, the market's going to go down fairly quickly. So you want to hedge, you want to be ahead of it. However, you will also be ahead of 99% of the herd if you're following this, because you'll understand, okay, like this is actually the correction where I need to get out, not this past one, because you understand that the markets, the debt market is still not good enough to outweigh what's going on in the crypto and stock markets. So that's kind of how you have to look at it. A lot to learn. I hope that makes sense. Like I said, any questions, let me know. But I'm holding on, waiting for one more dip before I buy. I'm getting ready, though, getting my positions ready. And I do plan on having whatever I'm getting ready right now in by the 26th, probably the 25th, because the markets after that Fed meeting are likely going to respond positively. So that's that for you guys. I hope you guys learned something. Appreciate you guys listening. Have an amazing day. Crypto markets to the moon. Dollar index down to the ground. That'll help us. The 10-year yield to the ground. Yes, that's right. So y'all, again, have an amazing day. Remember to be kind. Thank you for watching. Adios.